Hey guys, John Paulamy here, Actionable Intelligence. Today is actually Sunday, but I put together the market report yesterday, but we'll call it Saturday, October 12th, 2019. It's a weekly market update. So this is a day late, guys. I was traveling for my other work that I do. I just got back last night. Quick story, I live in South Texas, and it's pretty balmy down here, or it was earlier in the week, and I had to go to Denver for business. This early cold front, cold spell came in midweek in Denver. Actually, as I was landing at the Denver International Airport, the cold front was rolling in, and the flight was like perfect. There was no turbulence, and literally as we were landing, I mean, I thought the plane was going to crash. That thing was getting bounced around like a bunch of kids inside a bouncy castle. But anyways, made it there. Next day, driving out to the site. I mean, blizzard conditions. Luckily, I had an all-wheel drive vehicle, and then within about 5 hours, it was sunny again, and everything was melting. It was still cold. Temperature dropped like 50 or 60 degrees. So this is record amounts of cold we are seeing. In a lot of places around the world. Now, weather is not climate, and climate is not weather, but I have been an advocate for the grand solar minimum theory that as sunspot activity and solar activity on the sun surface declines, that has a correlation, not exactly 100%, but it's very highly correlated with lower temperatures. So I don't know, we're seeing press is not really on a lot of this stuff. So something to think about, something to watch. I just thought that was interesting to see temperatures drop 50 or 60 or 70 degrees in one 12-hour period. So that was interesting. Okay, let's get into the reality check this week. And this week, because of the information I'm going to go over later in the video, I wanted to revisit the definition of a couple terms. And as I've said before, I'm a firm believer that if you do not define your terms, if you don't understand what you're talking about, I mean, defining your terms allows you to know what you're talking about. There's a lot of people that just throw stuff out there and they don't know what they're talking about. They don't define their terms. Perfect example is climate change. That means a lot of things to a lot of different people. So I wanted to focus on these two terms today, investing and speculating, because I think people get this confused. And I think a lot of people are speculators and they don't even know it. They think they're investing, but they're actually speculating. And there's a big difference in risk profile and anticipated returns and things of this nature. So investing, to my mind, is when you put money to work and it generates a semi-knowable return on capital. For example, if you buy a rental house, if you rent it out for $1,000 a month, unless the people don't pay, you're going to get about $1,000 a month. And if you paid $100,000 for the house, and after all your costs, if you have a profit, your cash flow, you can determine your return. And it's pretty steady, pretty knowable. Same thing with interest on bonds. If you buy a government bond, if you buy a corporate bond, you know what the coupon rate is. You can anticipate the return on that investment. Savings account, your interest, money market funds, dividends from stocks. These things, you can look at some of these companies called like dividend aristocrats. These are companies that have paid dividends in an increasing amount of dividends for years and years, sometimes decades. So that's what I'm talking about investing, okay? Now, speculating is different, and that's what we do. That's what we're trying to do here. We're trying to look for big capital appreciation. And speculating is taking advantage of distortions in the market, mostly caused by government intervention in the economy, for the most part, or the cyclicality nature of resource markets and some of these cyclical markets that we're involved with, in order to achieve above average capital gains. Now, we're not looking for rents and dividends and interest when we're buying uranium stocks. We are speculating that the supply-demand dynamic is so skewed out of whack that when it corrects itself and the market realizes that we're going to have a substantial asymmetric huge return in the stock prices of uranium miners. That's a speculation. We don't know if it's going to happen. These companies do not produce any dividends, any return. Most of them lose money right now. So we're speculating. And what I want to emphasize is that most people are speculators even if they think they're investing. You know, the actions of the developed world central banks over the past several decades has caused anyone with money to become a speculator, whether you want to or not. And what I mean by that is everything is focused on what the Federal Reserve is going to do. Is the Federal Reserve going to raise rates? Are they going to lower rates? Are they going to go to QE? Are we going to go to the zero bound? This is all the discussion that happens in the financial markets. Very little discussion about, hey, is this a good business that has good margins and good prospects? And should I buy it so that can produce a return to me through dividends and stock buybacks? Very little discussion about that. That's investing. But the market has been so skewed and so taken over by this fiat money creation that everyone's forced to become a speculator. It's like, you know, we're on this road, driving on an icy road. And as the economy starts to weaken, it's like losing control of the road a little bit. The Federal Reserve starts lowering rates, and, you know, then it's like over adjusting on if you lose control of a car on ice, you start overcompensating one way or another. That's what the Federal Reserve does, because all it has, it's trying to kill a gnat or a fly with a 10-pound sledgehammer. That's the only tool it has. Or, you know, it'd be like you walking around your house and you see a fly and you're running around the house trying to hit it with a sledgehammer. Or your wife says, hey, can you put this picture up? Instead of getting a tack hammer, you're over there with a sledgehammer. The results are probably not going to be what you thought they were going to be. They're going to be overcompensated or undercompensated for. And the problem is if everything's just based on liquidity, the level of liquidity floating all boats, that's how you get into these asset bubbles. That's how you get into these everything bubbles. And anything can happen. And does. And this fixation on the central planning by the Federal Reserve. You know, everyone derides socialism and government intervention in the economy as bad. AOC is horrible. Bernie Sanders is a fool. Venezuela. Central planning doesn't work. These same people are fixated on what the Fed is going to do next. Isn't that not central planning of interest rates? We shake our head when we look at the Soviets and their central planners at Gosplan. You know, Gosplan was a building. It was like several blocks, square blocks, and it was like 10 stories tall. It was government planning is what it meant. And the Soviets thought they filled it with all these PhDs in math. This is before computers, all these mathematicians. And I saw a picture one time, a video about this. And they interviewed, this is near the end of the Soviet Union, like in the late 80s. And they went to one of the offices. They had offices for everything. In this particular office, there were 3 guys in there, PhDs. And their job was to determine how many shoe shine brushes should be made every year. Now, it sounds ridiculous. And they were surrounded with all these chalkboards, and they had notebooks piled to the ceiling, and they were, you know, slide rules, and they were doing calculations. And it sounds funny to us. How could 3 guys figure out how many shoe shine brushes should be made for the Soviet Union, and of what quality and what quantity, and the materials? It doesn't work. We laugh at it now. But yet we turn around and we're fixated. Bloomberg, CNBC, blog writers, podcasts. What's the Fed going to do next? Is the Fed going to lower rates? What's going to happen if they lower rates another 0.25%? You know, what if the ECB goes from -50 to -75? Should I buy, you know, XYZ company then? What about the prospects of the actual company, the business of that company? Does it have a high return on invested capital, high return on equity, consistent over the years? How much debt does it have? Do the people that are running the company actually know what they're doing? This isn't really discussed that often. Because what we've turned this into is we're all speculating now. We're pitching pennies and flipping baseball cards. The average holding period for stocks is measured in weeks and maybe long-term considered months. when it used to be years or decades. And if you look at the successful investors out there, they're not pitching pennies. They're not flipping baseball cards. They're not on their phone, moving in and out of different stocks based on, emotion and what the Federal Reserve is doing. So I wanted to talk about speculating because that's what we do here. I do have investments. I do have long-term investments. I'm invested in timber. I've been involved with that for over 20 years. Every year, the stumpage, the amount of the trees grows by 6 to 8 to 9% every year in and year out. I do angel investing. My money's locked up, for potentially 5 to 10 years in some of these startups. I got into a fund that's invested in Uzbekistan because I think that that's going to have long-term prospects over the next 2 decades, which I've explained in a blog post. That's investing long-term. Some of these other emerging markets, Myanmar, Mongolia, I have long-term investments there. But I also speculate, uranium, shipping. And now shipping looks like it's starting to turn. I mean, massively. Let's get into that because it's very exciting. It can show you what can happen in a cyclical industry that is also having some government intervention, forcing some things to get skewed to the upside. In the last couple of weeks, I've been talking about this. Well, even the last couple of months, we've been talking about shipping, specifically the International Maritime Organization 2020 rule on sulfur fuels and the necessity on 1st of January 2020 for ships to start using low sulfur fuel or install scrubbers to allow the use of high sulfur fuel. They want to get the sulfur content of the emissions out of the atmosphere. So that was already causing some distortions. That's what I'm talking about as being a speculator. We knew that that was going to, this mandate by the IMO, which is a subset of the UN, this organization everybody on Earth agreed to, this new regulation, and it's causing distortions in the market. What do I mean by distortions? You're removing ships from being able to transport goods to have scrubbers installed, number one. Okay, so that's lowering the amount of tonnage miles that's on the water at any one time. And of course, people have waited till the last minute to start installing these scrubbers because they want to maximize the amount of time that the vessels were available for transport. So now you have shipyards starting to get backed up. So that's one distortion in the market caused by a government supranational body, if you will, the UN IMO subset regulation. Now, let's talk specifically to crude tankers. Why are crude tankers setting all-time highs last week, tanker rates? Because President Trump issued an executive order to put sanctions on the Chinese overseas, basically Costco it's called, is the name of the company. It's a massive Chinese state shipping company, and they have like 50 or 60 crude tankers. The reason he put the sanctions on them is because they were transporting Iranian crude back to China. So now they weren't just doing Iranian crude, but that company had been using some of their tankers for that. So he put a sanction on them. They can't carry any crude now. So nobody is contracting with Costco for their crude tankers. Now, this is a massive distortion in the market. There's a set amount of tankers, very large crude carriers, Suezmax size tankers, okay, that can carry crude in the world. If you remove 50 or 60 of them from the balance by fiat, by a proclamation of Donald Trump, then you introduced a distortion into the market. You have reduced supply, yet demand is actually there and going higher. Then you couple that with various ships that are in dry dock getting scrubbers. You've reduced the amount of available tankers. Now, what do these tankers carry, folks? Crude oil. Who needs crude oil? Refineries, and again, billion-dollar complexes that refine crude oil, take in crude oil, and produce various products. Gasoline, diesel, naphtha, jet fuel, kerosene, asphalt, whatever. If you have a $1 billion facility that needs crude oil to run, then you need to constantly have tankers coming and offloading, or pipelines, or what have you. But a lot of these require tankers coming from all over the world to offload crude at a steady state to keep your refinery running. Couple into that the IMO 2020 regulation is going to increase the amount of low sulfur fuel. So refiners are gearing up for that changeover. Do you want to be a refinery manager or an owner of a refinery and not have crude oil? What do? Shut the refinery down? How does that work? I worked in a refinery. It takes a week to shut a refinery down and a week to start it back up. That's not how it works. So you will pay what you need to pay to ensure that you have a sufficient supply of crude oil to keep the refinery running, especially if you look at the crack spreads. And the crack spread is telling you how much profit per barrel you get for turning that barrel of crude oil into its constituent products. So these crack spreads are very high. So it's telling refiners they need to put more refined products into the market. So they need more crude oil. They need to keep the refinery running. People just don't shut these things down. These things run 24/7, 365, and they take maybe a 2-week to 3-4 week, maybe what's called a turnaround every year, usually in the shoulder season, in the low demand season, between like winter and spring, or in the fall, depends. Otherwise, it runs 24/7, 365, tries to, and you need that constant supply of crude. So if the amount of crude tankers has been taken out or lowered, the supply of crude tankers, because of Donald Trump issuing an executive order against the Chinese tanker company or shipping company, and you already have a lower supply because you have ships in dry dock for scrubbers, plus the fact that the industry was turning anyways. Scrapping had been up, lower new builds. The industry was already recovering anyways, and we are into a cyclically positive period for tankers. So this confluence of events has come together to create this supernova of high tanker rates. Here's just some blurbs. Occidental Petroleum tentatively chartered VLCC carrier Hong Kong Spirit to ship U.S. crude from the Gulf Coast to Asia for a record $15.8 million this week. So Oxy's going to pay $15.8 million to have this cargo shipped. This is one trip. I mean, this is like very. Now you say to yourself, well, how can they make money? Well, these VLCCs and these Suezmax tankers carry, 1 million, 2 million barrels of crude. So if you just take the 15.8 million and spread it across each barrel, it's maybe only a few dollars per barrel. So it's de minimis, it's insignificant, especially when refining margins are very high right now in Asia, super high as a matter of fact. So you need to keep that refinery running and make hay while the sun shines, while those crack spreads are high, so they'll pay. And guys, this is really relevant. I mean, you're talking about rates that, if you do some back of the envelope calculations, some of these, if these rates stay in effect for 6 months or a year, which I don't think they will, but even if they back off, they're going to stay fairly high. You're going to have a tremendous wave of cash flow hitting these companies. Shipbrokers say bids today for chartering VLCCs, those are very large crude carriers, those are the largest tankers, oil tankers, from the Gulf Coast to Asia were assessed as high as $20 million. That's one trip, although no charters actually were booked at that price. In the Arab Gulf, Indian Oil Corporation reportedly was offered rates as high as $16 million to ship Iraqi Basra crude to Chennai, India. That's not even around the world. That's coming out the Gulf, out of the Persian Gulf, and swinging around in the Indian Ocean. $16 million trip. So let me explain this, break it down so you understand why why these rates can go high. Because I saw a lot of comments on message where people are like, well, I don't understand how these rates are spiking. I just explained it to you a little bit. You run a refinery, you've got to have that crude feedstock. You cannot go without it. You cannot shut this refinery down. It's so large, there's so much going on, it's so complicated, the processes, and you're making so much money, you have to have that feedstock, that oil. You can't afford to not have crude oil available to refine. So let's assume, for example, that there's only not, in this little world we're going to create for illustration purposes, that there are 98 cargoes out there that need to be shipped, but there are 100 vessels. Well, rates are going to be very low because there's an excess capacity of vessels to carry a certain amount of cargoes. There's excess capacity, there's excess ships available in this scenario. So rates will collapse. I mean, almost to the point probably maybe even below break even, because people want to keep their ships moving. They don't want them just sitting around doing nothing. So they will offer maybe even lower at break even or lower just to keep the ship moving and hoping that once they discharge that cargo, they can pick up another profitable cargo. Conversely, if there are 100 cargoes that have to be moved and there are only 98 ships, that's a bull market in tanker rates. Why? Because these refineries, I said earlier, need this oil at a certain date so they don't run out. They keep minimum stockpiles. They have to. They want to keep a certain stockpile, but if they fall below their minimum, that's dangerous. So they will pay to get this oil to their refinery. But there are 100 cargoes and there's only 98 ships. That's how you get a spike in these. That's how tenuous the supply-demand balance is in these cyclical industries, guys. That's what I've been preaching about and talking about since I had put this video channel up. That when these things come together, this is when you can make a tremendous amount of money. It's the same thing in any commodity market. If the demand is 100 units and there's only a supply of 99 units, the price goes up. Conversely, if the demand for a commodity is 95 units and there's 100 units available, the price goes down. This is basic supply and demand. It's the marginal cost. I mean, look these things up that's on the internet. These are simple micro and macroeconomic principles that most people learn in high school. Yet you on message boards and people go, I can't understand why the rates are so high. That's because they don't understand this refining business. They don't understand supply and demand curves. They don't understand game theory and human nature. And they don't understand that if you're paying $16 million to hire a vessel to carry your 2 million barrels of oil to the refinery across the ocean, that the cost across is $6 or $7 a barrel. And if your crack spreads are run at $25 or $30 a barrel, you don't care. You just need the crude oil there. Now, there was a big, on Friday, evidently the president and the Chinese have gotten to some kind of phase one deal, they're calling it, on the trade negotiations. I did not see a lifting of sanctions on Costco as part of the trade deal that was announced. Now, this is something to really keep in mind if you're going to try to jump into this thing and play this. Because if the sanctions are lifted and these tankers come back on, then I would suspect that rates are going to come down. Now, I don't think they're going to crash, but they are going to come back in. We still have other positive elements in this tanker story, in this shipping story. IMO 2020 is still coming. I mean, you saw that we've been talking about Scorpio tankers for the last couple months, and it continues to make new highs. It being a clean tanker, can take refined products around, specifically diesel and this low sulfur fuel. Plus, they have all their ships have scrubbers, or most of them do now. So they're going to potentially benefit. We've talked about this. So a lot of the other things are in place. So I would expect that if these sanctions were lifted on Costco and these tankers were to enter back into the fleet, if you will, world fleet of crude carriers, then rates would pull back. But I don't think they're going to crash because we still have, all these sanctions and all these, we still have sanctions on Venezuela and Iran, and these have introduced distortions into the market because you have to go to other areas potentially that are further away to bring crude to your refinery. So, plus the fact, I still don't think we know the full story behind what's going on in Saudi Arabia. I think there's some things going on where the Saudis have been buying crude from other producers. They've been lowering their own stocks. They've been stopping refining inside their country. They have some of the largest refining capacity, and I think they're sending that crude overseas to their customers. But at some point, then, if they're not producing products from their refinery, then somebody else has to produce it. So you're creating all these things are creating distortions in the market that are all coming together to uh, create this spike, if you will. Yeah, this is what happens when you have something like this happen. So this is a chart of Nordic American tanker. I had bought some shares just as speculation last couple weeks ago because I started sniffing this out. I mean, you really kind of, guys, if you want to get on this stuff, I mean, I have the monthly newsletter, but the monthly newsletter is not going to catch these kind of things. I mean, I'm on Twitter at John Polemy. You should follow me there because I've been tweeting out about this stuff and tweeting out about what the Scorpio tanker CEO was doing well before everybody else was talking about. Not everybody, but most people were talking about it. So if you follow me on Twitter, you can pick up on some of these seismic events well before the public does. Because they don't, if I'm only putting the newsletter out once a month, a lot of times these things happen well before I can get a newsletter out. But look at how this thing's blasted off. I mean, this company owns like 28 or 30 Suezmax crude carriers. That's it. That's what they do. And they had some commentary on their website about what's going on. And this thing's blasted off. Why? Because people are, it's way overbought. I mean, this isn't sustainable. And it's probably going to come back in. But I think that going forward, we're still in a up cycle for tankers now. This is a stock that at one time was a $40 stock and paid like a huge dividend. And like everybody else in the shipping industry, got decimated. People aren't building a whole bunch of crude carriers right now. It's like everything else. Rates were low for so long, it was in a depression, that older ships were being scrapped and newer ships were not being built to replace them. We're to the point now where you can almost do, at these rates, if you do 2 or 3 trips, you've basically paid for your ship. At current values of the steel, if you want to look at it that way. And scrap steel rates are up, so that's encouraging some people to scrap older ships too. Now, of course, when rates are this high, every rust bucket that can carry a crude cargo is going to be put on the market. But what I'm trying to tell you is that I think we're in an upcycle regardless of the spike that we just happened. I think this is real tasty. What's going on? It's drawing more money. This is what happens, right? You get this news, you get the spike, you see this huge volume that shows up on people's screens, this real blast off right here, when the first news came out, and then all your algos and all the other money, look what happens. In the initial spikes, people were seeing what was going on, that knew what was going on, the volume wasn't there, computers pick it up, boom, it goes. Now, this thing needs to pull back, but I think this thing can go higher over time. And this isn't the only one. I'm just using this as an example. I'm not saying you should buy this. I'm just using this as an example for illustration purposes. But this is what can happen when these events come along. And this is what, you're up, 30 or 40% in a week. So this is why people were like, well, why is the CEO of Scorpio Tankers buying all these call options that are going to expire in 3 months? Because he understands that the odds are in his favor, that these shipping rates are going to go up and be sustainable through the time period that he has his call options to give him a return. And since he's bought them, I mean, a lot of those options he bought are already in the money, just based on the move that we've seen in Scorpio stock over the last couple of weeks. So that's my quick and dirty on this. I hope you got something out of this, because this applies not only to, this is what's going to happen in uranium stocks eventually, guys. That's what we're speculating on. If the supply-demand curve goes like we think, eventually this is what will happen in uranium stocks. We will blast off like this. You just have to have the patience. Nothing was happening in these tanker stocks for a while. and then boom, it just decides to go. That's why I feel you have to be positioned, or at least have some methodology in place technically that allows you to catch a breakout. Because if you're just going to sit around and think you're going to trade it and you don't even know what's going, paying attention, then you miss out on these breakouts. So that's it for this week, guys. Thanks for listening, and we'll talk to you next week.